We have an excellent group of speakers with us this afternoon. We have Chris Sullivan, Chief Executive of Corporate Banking for RBS, who've kindly sponsored this afternoon's opening session. We have a man who needs little introduction, the Right Honourable Dr. Vince Cable MP, Secretary of State for Business, and some would say an outspoken and very strong voice on business finance issues. We have Samir Desai, who's Chief Exec and co-founder of the fast-growing peer-to-peer lender Funding Circle. And we have Lucy Armstrong. Lucy is a woman of many talents who is Chair of Capital for Enterprise, amongst her many other roles, but also is an experienced business growth advisor herself. So, ladies and gentlemen, to start off our afternoon, please could you give a warm welcome to our panelists on business finance. And Chris, if I can hand over to you to give us a perspective on this issue, financing Britain's growth businesses. Chris Sullivan.
Thank you very much, and it's a delight to be here again and to sponsor this, this get-together. I had hoped, having been here 2 years ago and having spoken to you around, first of all, apologising for the behaviour of banks, and then saying, well, that's not enough, we need to do more. And then outlining the things the foundations that were already being built. I had hoped to come here and talk to you about the progress. I'd hoped to come here and talk to you about the proper bankers, qualified bankers that we were developing at that time, of which there are now 4,000 accredited bankers out there. Every single RBS banker will be a qualified banker for business by the end of this year. I'd hoped to talk to you a bit about the channels to market, the new mobile channel, the fact that the access to our people was no longer bank hours, but was 8 o'clock in the morning till 8 o'clock at night. I had hoped to come and talk to you about the fact that we were segmenting ourselves into specialists in certain sectors, about the fact that we changed the culture away from selling products, completely away from selling products, actually, to how do we help you to run your businesses more effectively. How do we help you to be safer? How do we help you to be more efficient? How do we help you to grow? And all of those things are in place now. Done, delivered on time, on budget. I have all those people out there. However, I had hoped not to still be talking about lending. But the debate of lending still rages, so I thought I might confuse you all with some facts. Is it demand or is it supply? That's the age-old question. And in truth, it's neither one or the other. It's both. There's always some of each. There is no silver bullet. I know there are many people that would like to think there are, but there aren't. It's a combination of doing a whole lot of things an awful lot better. But let's just look at the issues around demand to start with. If you're a business in the UK at the moment, and I see about 300 a month, I've been to Aberdeen this week, I was in Glasgow last week, I was in Cambridge last week. In fact, there are people in this room that I met on each of those visits. And overwhelmingly what businesses are telling me is that they're worried about the economy, they're worried about the climate. And actually, they appreciate the things that are being done around making lending cheaper and more accessible. However, actually, they don't feel comfortable about risking their capital. So 2% on the interest rate in a year is great, and if they wanted to borrow, they'd love to borrow right now. But actually, the thought of losing my 100% capital against the reward I think I might be able to get still doesn't really work for me. So there is a confidence issue out there. It manifests itself in £55 billion worth of SME deposits sitting in my bank right now. That has gone up from about 2/3 of that number 4 years ago. It reached a record level 3.5 years ago of my career, 38 years my career, record level, and it's gone up every single month since. That's £55 billion that could be used in people's businesses right now, and they put it in the bank. And we all know that the interest rates that people are achieving on those are not particularly spectacular at the moment. It manifests itself in overdrafts that currently utilised at a 42% of their capacity. That figure was 67% in 2007. So that for me is evidence that people are nervous, and we need to do something to help. And people ask me, is funding for lending working? And the answer is, nobody knows yet. It's been too short a period of time. We haven't even had 2 full quarters of results. And even if it isn't stimulating demand immediately, it may well be that what it's doing is getting people to think again. And if it's doing that right now, there'll be a lag and people will start to invest more. Let's look at the supply side. There's a view out there that banks don't want to lend. I have no reason not to lend. I have every reason to lend more. I have a business just like you've got. My business is dependent for its future on growing. Growing my lending book is a key part of that. It's something I would love to happen. I have no capital constraint for British businesses right now, none. I gave you some numbers. I could lend £10 billion tomorrow, today even, and be happy to do that. In fact, I'd be delighted to do that if I could find people who wanted to borrow off us. I'm currently accepting 93% of all applications that come through the door. That's, again, the highest level in my history. I'm approaching a level where actually people would have seen it as highly dangerous in the past. But let's talk about that human behavior. We talked about customers being nervous. Well, my guys are nervous too, actually. There's a human behavior inside the bank. If less than 4 years ago you were getting criticized heavily for irresponsible lending, the last thing you want to do right now is to get accused of irresponsible lending again. So we have to do things to encourage our people to be brave in that sense. And it's a battle. It's an ongoing issue. We're constantly looking for more things that we can do. Today, I've announced another large number of fully qualified, very experienced regional lending managers who are going to be sent out to the regions to actually work with our day-to-day line managers to actually lend more money, to open the pipeline, to increase the appetite that we've got. So, we're keen to do it. There is no reason why we wouldn't want to do it. Last year, by the way, and I think it's important that RBS stands up and says this, RBS has 24% market share of small businesses. I lent £58 billion to business last year, of which 30 went to small businesses. That's 36% of the market. So RBS lent 36% of all lending last year to small businesses with a 24% market share. I think I've got the right to stand up and say I care. I really care. I care about my business and I care about my customers. And we know our customers. Part of what I was doing in building the foundations for our bank was to ensure I had properly qualified people in front of our customers, because you deserve that, and I give them time to get to know you. And they do. And you all tell me that when I go and see you time and time again. So I guess I'm going to finish this on a really positive note. The thing that I think we really ought to do is to start working together, politicians, the media, businesses, and banks, to try and see what we can do to improve confidence. I'm out there, as I said, and even in the last week or so, I've seen some fantastic business. I saw a business called Contamac in Cambridge, world leader in intraocular lenses, so fantastic technology in Cambridge. I saw fantastic businesses, world leading in Aberdeen. We never hear about these businesses. We don't shout about it. I go to America and I hear America shouting the rooftops out of anything they've done, which appears to be reasonably successful. And here, we hide our light under a bushel. And we need to do more about encouraging people through success. A lot more about that. My job is to help that success happen. So I think it's important that we do that. And it's important then we put things in place to be able to help businesses to grow. And I think government and ourselves can work together on that, because we have the reach into the communities to be able to get things happening. Things around export. Too many businesses want to export but don't know how to do it, don't feel confident enough to do it. Banks, there are 2 banks in particular in the UK, ourselves and HSBC, who've got representation in many countries, primarily to help people to trade. And we haven't got that message across strongly enough. So helping people to be confident is a key part of what we do. So if I can leave you with one message, RBS is alive, it's well, it's safe, it's sound, and it's looking forward to working with you to make your businesses better, and we will use every single ounce of everything we've got to do that. Thank you very much.
Thank you, Chris. Truly an impassioned speech, and one where you've set out your stall for what you want to be doing and to work with businesses. We've got other panelists with us today who also have visions about how businesses, the government, and the banking system, the finance system can work together. I'd like to let each of them make some opening remarks and then open it up to audience participation if I can. And for those who are over my right shoulder, don't worry, I will turn around to make sure that we get your questions in as well. Let me start with you, Vince Cable, Secretary of State for Business. You've heard the perspective from Chris, you've heard a perspective on demand and supply, and we know you've had quite a lot of things to say over the years about business finance as an issue. What's your vision for dealing with some of the challenges that we've been hearing about, both today but also in recent months?
Well, I think there are two separate problems and they overlap. The first is the fallout from the banking crisis. And banking has changed as a result of the collapse of some of the banks and the caution of others. There has been anyway, a funding problem. Wholesale markets have been closed, so it's been difficult for banks to get access to the markets for cash. And there's also been a capital problem because, the authorities are trying to stop the banks falling over again, so they've been required to hold more capital, and this has constrained what they can lend. The sense we have in government, although Chris is right and he's trying hard to develop his business, I mean, the feedback we get from the other side is a lot of businesses find it very difficult to get access to credit on what they regard as reasonable terms. Just purely by anecdote, in my department across the road, we've just installed 2 entrepreneurs in residence. 2 successful entrepreneurs. We've invited them to work in the department and give us advice. And we got them in yesterday, and the first one, we just said, what do you want to tell us? And we got a quarter of an hour tirade about RBS. And this guy who's a manufacturer trying to export cars overseas and just going in total despair. So, this is what we hear from the business side. The second problem is that it's much more long-standing than the banking crisis. Go back to the Cruikshank report in 2000, lack of competition. Quite unlike Germany, where you have all the regional banks, or the US, where you have lots of banks, we had basically big 4 banks. Cruikshank's analysis, this is a decade ago, was that there was an inadequate competition, excessive profits, very difficult for new banks to come in. Problem has actually, in many ways, got worse. So those are the 2 things we're trying to deal with. And there are several ways we're trying to make things happen. The first is actually trying to cover some of the risks of the banks so they can take on more lending, and we've done that through our guarantee scheme. The funding for lending is part of that. Hasn't done enough, but I think it's in the right direction. Secondly, genuinely trying to get more competition into the banking system on the business side, and we've got new banks popping up now like Metro, Handelsbank and Shawbrook, several others, and I think the FSA rather belatedly now realizing they've got to drop some of their regulatory requirements so new banks can come in. That's now beginning to happen. It's all painfully slow, and that includes local banks. We've got the Bank of Dave in Burnley, and there's the Airdrie Bank, and there's a new bank in Hampshire starting. I mean, it's slow, but we're beginning to get there. Thirdly, non-bank finance. Some interesting things are happening with peer-to-peer lending, with supply chain finance, and we've got a variety of schemes designed to encourage supply chain funding in manufacturing, and some of these innovative forms of finance that bypass the banking system altogether. Fourthly, you've got equity, because a lot of companies may have difficulty getting debt, but they also have difficulty getting equity, and right the way up from establishing a company at the very beginning, reliant, as they say, on friends, fools, and family, right up to the kind of medium-sized company that's trying to get into the AIM market and needs equity, but finding the market's very sticky. And we've got a variety of schemes trying to pump prime that. And then finally, we're trying to set up at the moment through the government what we call a business bank. We've got to advise Celia here a little bit more in a moment, but it's essentially designed to support new sources of funding coming into business lending through the banking system. It's designed to support new challenger banks when they come along, and generally create a more competitive and diverse landscape for business lending.
Brilliant. And of course, the business bank is a proposal that the BCC has done a huge amount of work on in recent years. But another thing that we've been privileged to do actually is to talk to a lot of the alternative sources of finance that have been emerging in recent years, because a lot of people have spotted a gap in the market and are now working very hard to fill it. One is Samir Desai, the co-founder of Funding Circle. You're growing quite quickly. At last count, I've lost track of just how many millions you've lent till now. But how can alternative financing play a bigger role when you hear about going beyond the banks and have more alternative sources of finance in the mix?
Yeah, so Funding Circle. Actually, how many people have heard of Funding Circle in this room? It's actually getting a bit better now. So what we are is we're a peer-to-peer lender. So we allow individuals to lend money directly to businesses. There's about 30,000 people lending money on the platform at the moment. They've lent around 84 million so far, so still small compared to RBS. But this month we'll lend about 9 million. That's treble what we lent the year before, and actually roughly the business is trebling every year. Vince talked about Bank of Dave. There's 1,000 Bank of Daves on our Funding Circle at the moment, lending money all the time. I think the message around alternative finance is very, very important. Ed Miliband talked this morning about how concentrated our banking system is in the UK. 84% of lending done by the top 5 banks. And what we've found is, we've got crazy amounts of demand from businesses who, like it or not, don't want to go to a bank for a loan, actually. What we like to say is we don't think there's a lack of demand for loans, we think there's a lack of demand for bank loans. At Funding Circle, businesses get the money much faster, they speak directly to decision makers. And as I said, a number of businesses don't even approach the bank now, actually. They come straight to us.
Brilliant. And tripling year on year, you said.
Yeah, and I think the regional bank initiative that was talked about this morning, that's very, very interesting. And you look at markets like Germany, the US, there is a big regional banking system. Having said that, it will take us a long time to build that up. But there's this thing, called the internet that we all know about, that has transformed industries in the past. 50% of online music sales now done through iTunes. You look at Skype and online telephony, and if you look at the way big businesses borrow money, they don't have to go to a bank. So 20 to 40% of big business finance goes through something called the bond market, where they can effectively go directly to investors. And what the internet has enabled us to do now is to connect thousands of people directly to businesses. On Funding Circle, we don't just have people now lending. We have local councils, so Lancashire County Council is lending through our platform. We've got universities like Huddersfield University. We're in the final stages of potentially getting 20 million from the Business Finance Partnership Scheme to go directly to businesses. So you can bring together a vast number of participants through a very efficient mechanism to really transform the landscape.
I get the sense from what you're saying, Samir, that there's room for lots of different types of business finance in this equation, and that the banks are going to remain incredibly important, but the alternatives are growing. Yeah. Now, Lucy, you and I have talked quite a lot about some of those alternatives over time. We've talked in particular about this question of patient capital, making sure that businesses in a growth phase can get the money that they need over a long period of time, whether that be through debt or through equity. How could the new business bank perhaps help with that? Vince referred to it a moment ago and left us in a bit of suspense because he knew you were going to say something about that.
Yes, I should explain that Vince has appointed me to be one of the members of the advisory board for the business bank. I think part of this discussion could perhaps be more usefully framed if we start talking not about individual financial products, but about the different types of capital that businesses need to grow and sustain themselves. And I think all too often in the UK, we spend time talking about debt or lack of credit. And in fact, we don't talk about the working capital requirements to keep your business running day in, day out and paying bills, which Chris's overdrafts are really good at and Samir's Funding Circle is really good at. And at the other end, your long-term investment capital requirements for things like building a new factory, embarking on an export strategy, radically restructuring your balance sheet, for which equity is potentially what's required, whether that comes from fools and family or from the markets, if you're a quoted business, or from private equity providers, or long-term debt capital, which may come from Chris, could come from bond markets for bigger businesses. And all too often in the UK, our discussion just talks about debt. and just talks about overdrafts, and just talks about loans, and just talks about banks. And it seems to me that the banking crisis actually gives us an opportunity as a group of business people to have a more mature conversation about finance as a resource for growing your business and finance as a resource for running your business. And certainly at Capital for Enterprise, clearly our role as the government's body in intervening in the provision of finance is to try and act as a catalyst, to try and nudge people into perhaps making rather more mature, measured decisions and give them a range of options, not to substitute for private provision, but to illustrate how different types of finance may be provided. And certainly the business bank, I see longer term, one of its primary roles is not about shoveling money out the door today. I think, as Chris said, you're talking about tens of billions of pounds that will get invested every year by the banks. The business bank has £1 billion as its initial funding. That's less than a 60th of what will be invested this year just in family and private businesses in the UK by the main banks alone. But what the business bank, I think, can do is be innovative and creative where there are gaps. And two clear gaps at the moment, it seems to me, are clearly around the equity provision, long-term risk capital at the high-risk startup and high-tech, fast-growing startups. Not necessarily the one-man band in a traditional industry, but where you might be leading-edge technology. There's a gap there around risk capital. There's also clearly a gap around patient, possibly debt, but possibly equity or between the two, patient capital for established, probably more traditional businesses. 5 to 15-year type money that is difficult to acquire, partly because of regulation on the high street banks, and partly because of the equity model in the UK is perhaps operating at a slightly shorter term. And we have an equity aversion in the UK. We don't like selling shares or using our shares as an asset to grow our business. So for me, the business bank is there to be a catalyst. It's there to be an educator and to be a prompt. And most importantly of all, I think its success will be judged in 20 years, not in one. And in that by then, it should have crowded in private monies into new areas of innovative finance that today we are not using. We might be starting to develop with things like the funding circle. But in 20 years' time, there will be a much larger menu of different types of working capital and investment capital for UK businesses to grow.
Brilliant. Lucy, thank you very much. Well, audience, you've now heard from your panellists. It's time for us to hear from you, in the first instance through your voting keypads, if I may, and then thereafter through your questions. So please start preparing your questions, but have your voting keypads at the ready. First question is one where we can take the temperature a little bit. Since 2007, do you believe the environment for business finance has, 1, improved, 2, deteriorated, or 3, that there's been very little change in the business finance environment? It allows us to test a little bit of what we've heard from our panelists earlier on today. And now let's see if we can see some results on that particular question. More towards the sense of deterioration. So about a fifth say it's improved, close to half deteriorated, and we've got some stagnation there as well. Okay, next question, please. Do you think that the proposed business bank, given what you've heard so far this morning, will be an important part of the business finance environment? Please click 1 for yes or 2 for no. Obviously, many of our panelists have been talking about that this afternoon. And I think we're ready to see the result. Okay, so an endorsement for the business bank. You'll probably have a lot of pressure following up from Chamber of Commerce members around the country to make sure that that endorsement is then translated into action, and hopefully not in 20 years. And then finally, one more question, just to contextualize the debate we're about to have. Have you had to look at alternative forms of finance, going beyond traditional bank loans, coming back to some of what Samir has said, to finance the growth in your particular business, if you are in fact a business person in recent years? Please click 1 for yes or 2 for no. I'll give you a moment to ponder that. And I think we're ready to see the results on that. Interesting. Interesting. Over half looking at alternative sources of finance for their business. So I think some of what Lucy has just talked about there, about a more diverse model of business financing, is starting to actually take shape. The bank's very much a key part of it, but also alternative sources of finance as well. Well, it's over to you, ladies and gentlemen, now for some questions. I'd like to take them in groups of 3 if I can, so that I can get them to our panelists. I'm going to start at the previously shy side of the room over there. I've got a lady just there towards the back with her hand up. Do you see her, Danny? Yeah. And then the lady several rows just in front to follow. And how about this side of the room? I have a gentleman here at the back of the room, just here. Okay.
Hi, it's a question directed to the Business Secretary. Dr. Cable, my name's Kirsty McGregor and I run a network of accountants that between them across the country have around perhaps 30,000 SMEs as clients. Recently, the R3 and other bodies have been expressing concern that there's a growing number of what's termed zombie companies, companies which are just stagnating, that are just about servicing their interest, and only through the continuing support of the banks and HMRC are they managing to stay alive. So my question to you is, I think most of these probably shouldn't be run by the owners that they're currently run by and should be sold rather than wound up. And let's keep those employees in business. Let's keep the income coming into the country. But what are you doing to encourage other companies to think about acquisition? Because we find that SMEs are rarely confident enough to make a business acquisition, and there's a huge potential out there.
Okay, so important question on business acquisition. Then there was a follow-on question. There was a lady a couple of rows just in front of you who has a microphone.
Hello, Wendy Bowers. I'm the president of the East Lancashire Chamber of Commerce. I have a long history in helping companies to access finance, and so I could understand everything that you were talking about then on the panel. But my question is that many SMEs, whilst experts in their own particular industry, really do not understand the vast array of finance products that are available and the different ways that they can support their business through finance as they grow. There's been many initiatives over the years that I've been in business to address this and to somehow make it less confusing for businesses to access the right kind of finance at the right stage of growth. Can I ask, is the business bank going to address this, and if so, how?
Interesting question, Wendy, and one that's been reflected on Twitter so far this afternoon. Lots of people making comments about initiative-itis or concerned that there are too many acronyms in the business finance space. And then finally, the gentleman just here.
James Dury from Business West in Bristol. I'd agree with Chris Sullivan's comments around the first hurdle being around confidence. But secondly, in terms of capital, a question to the Secretary of State around the business bank. He talked about Biz trying to set up a new business bank. And I just wonder, given that really economically we need to be on a war footing, why is it taking so long to set this up?
Okay, thank you very much, James. Several different sets of issues there. What I'd like to do first, on business bank in particular, can I come to Lucy and to the Secretary of State as well? On both the time frame question, Lucy, you said 20 years, and I saw faces in the audience looking a bit downcast. And to you, Secretary of State, on clearing up some of the confusion that SMEs often face in this space. And then I'll come back to the other two questions.
Don't get me wrong, I said measure the real success and the longevity and the sustainability in 20 years. As an advisory board, we've been very clear with the civil servants that we're working with, which is the business bank has to do something now. And by now, we mean now in 2013. And we expect to be spending and investing some of the money, not all of the money, now in 2013. And I think I'm right in saying, Vince, you got a paper to that effect yesterday. In terms of why is it taking so long to set up, actually as an advisory board, we were set up only in early January. I think I hope you'll hear something in the budget next week, and I've just said to you, you'll see some action this year. But again, I go back to my earlier point, 60 billion being invested by the mainstream banks every year. We've got 1 billion to try and establish a wider menu of finance that will be sustainable in the UK and act as a catalyst for a changing marketplace, hopefully in perpetuity. So rushing out and just spending £1 billion will not achieve that. We have to sit and think about that quite long and quite hard, and we have to work with other people. And it's our money, it's taxpayers' money. So one of our objectives on the advisory board is that for every pound of your and my money that we're going to spend, we're hopefully going to bring in a similar amount, if not greater, of private money. So that any initiative we're doing, there is private skin in the game as well as taxpayers' skin in the game. Otherwise, I may as well hand out £20 notes to all of you now and walk out of the room. And I don't think that's what any of us envisage the business bank being there to do. What its real capability is going to be about changing the environment for finance and business in the UK, not actually about how much money it puts in people's hands this year or next year. So I think, yes, you need to be a little bit patient. We recognise we have to have short, medium and long-term wins. We promise we are trying to do that. We're working very closely with the civil servants and with the Secretary of State and his team to deliver that. And as an advisory board, we think that's what we've been asked to do.
Okay. Let me bring Vince in and then bring Chris in on this point as well. You know, one was this question about the business bank helping to clear up confusion, but also Lucy's raised an important question of scale here. You know, the BCC is knocking on the Chancellor's door saying they should have £10 billion in additional capital, not £1 billion. Do you think it can make a difference? And do you think it can also help clear up some of the confusion that Wendy's brought to the table?
Well, I think it can operate at scale. Its initial equity is £1 billion, but there is also very substantial guarantee powers. So we think it would leverage in very substantial sums. When we get going, I mean, it is, by the standards of these things, operating quite quickly. We had an announcement that it would be going last September. We'd established our committee to guide us through it beginning of this year. We've already got a team with getting deals ready, but they've got to be additional. There's no point just doing what the banks are doing. I mean, that would be a complete waste of taxpayers' money. We're trying to identify areas where the banks and indeed the peer-to-peer lending doesn't get to. But we will be getting money out of the door in serious activities this year. An additional role for the business bank is trying to sort out some of this confusion. And you're quite right, there are a lot of initiatives, a lot of schemes. Some of the schemes are not widely known about. For example, we've introduced some very good trade finance schemes to help businesses with short-term finance when they're exporting. And the companies that use them find them tremendously valuable, but they don't know about them and we're not advertising them well enough. And one of the purposes of the business bank will be to try to rationalise all that activity, have a single portal so that people know where to go and it'll be much more streamlined and sensible. Can I just say quickly a word about the insolvency issue and the zombies? I mean, there is a problem here, and it's partly a kind of cash flow issues. Companies that are surviving currently because interest rates are quite low, and they've got a low interest mortgage, for example. There are others that are below the water. They've got bad loan-to-value ratios because commercial property prices are depressed. And some of those will go under when the economy starts to recover and interest rates go up. And we know that's going to happen, and it's going to be difficult. What I'm trying to do now is to get our insolvency practices properly reviewed, because the worst thing that could happen is if we get large number of basically quite good companies that got into financial difficulties being hacked apart by insolvency practitioners and good, you know, rather than, as the questioner said, being taken over by someone else. So we're reviewing insolvency practice, insolvency practitioners' fees, the whole issue about whether we could borrow some ideas from the Americans, who are very good at ensuring that temporarily failing companies are taken over, and trying to prepare for this, what could be very difficult era of the zombie companies falling down.
Thank you. Chris, you wanted to intervene a bit on business bank, and I'm interested to see how our biggest lender to SMEs sits itself working alongside a business bank, but also coming back to James's point as well about confidence. I think he was reflecting some of the things you were saying.
Yeah, you make the exact point I wanted to make, actually. We should applaud this idea. This is an idea, and we should applaud the idea of trying to do something which influences not just short-term, but actually goes into the longer term. And in my view, what we're looking at here is something which influences the environment. So if you go back to what I said towards the end of my opening remarks, it was about how we work together. And we shouldn't look at 1 billion as being a small amount of money, or 2 billion in isolation. You should look at what it can unleash. And so it will create an environment which allows banks to be more capable of supporting businesses with the debt alongside the equity. It will enhance the situation for Samir as well. So it can unleash an awful lot. And as it becomes more successful, it will have even more power to do that. And so I welcome the idea, and I think we should applaud it.
Brilliant. Now, Chris has just used the word unleash, Samir, and you've talked about a trebling of your business year on year, so your business is clearly growing very quickly. But the point made by Wendy about SMEs' understanding of finance products, you asked the audience a question, about half of them had heard of you. Do you think there's too many different names out there, too many different badges? And do you think it stops people from coming, whether it's to your door, or to Lucy's door at Capital for Enterprise, or to Chris's door?
Well, I think that's, from what I understand, that's part of the purpose of the business bank, is to bring together a lot of these different programs. In terms of what government are doing, I mean, we're very positive actually. You could say the Business Finance Partnership Scheme has taken a little bit of time to get going, but in the context of us, I mean, we're a 2.5-year-old company, and this will be the first time that government has lent money over the internet directly to businesses. So it's a big deal, and I think we've got, it's very forward-looking. I think, scaling up these schemes over time, we've got 20 million. At the rate we're growing, that won't help us for very long.
It's going to be knocking on your door again very soon, Vince, I think.
But the biggest purpose of the Business Finance Partnership Scheme, I think, is to bring larger forms of capital into something like Funding Circle. So, when we start to get to 20 million a month, 30 million a month, it's going to be difficult to find, a lot more Daves to come along and put money in. And that's where, pension schemes, other investors like that need to start to get involved. I do think there are other things that government could do. There are a lot of tax incentives to invest in the equity of businesses, and a lot of tax disincentives, actually, when people lend to businesses. So I think, we could do a bit more around that. But I think overall, there's a lot of really positive stuff that's going on.
Brilliant.
I think there is a challenge back to businesses in this area as well, though, which is finance is one of your key supplies. It's one of your key foundation stones for growing your business. And in the UK, we're really not very good at educating ourselves about what that means. In Germany, if you want to set up as a plumber, you have to do a business qualification as well as your plumbing qualification. So you have to actually understand the basics of your balance sheet. So as someone who runs their own small business as well, one of the challenges I would come back on both the zombie companies and the proliferation of public sector initiatives, as well as the number of products from private sector providers, is actually what are we as business people doing about educating ourselves about the supply of one of our primary assets? Because you can bet your bottom dollar we're close to our other suppliers. You can bet your bottom dollar we understand how they work. But somehow in the UK we excuse ourselves if we, quote, don't understand finance. And I don't think that's acceptable. It's not just businesses' fault, it's also the providers, and they have a role of signposting. But it is partly incumbent upon us to educate ourselves about one of the most important assets for growing your business.
So as in the words of a politician not long off the political stage, education, education, education. Chris, last word to you, and then I want to come back to the audience for a second round of questions.
First of all, I think it's great to listen to Lucy, and it's great that she's involved in the business bank, because she knows what she's talking about. You can tell from everything she said today. The issue about understanding the products is a really interesting one to me. Coming back into corporate banking in 2008, post-crisis, I started talking a lot about the abuse of the overdraft. And in fact, sort of banks and customers also became used to using overdrafts for everything, which is patently not what they were there for. So getting the right products into the funding of a customer is important. So we haven't talked today about other things like asset finance and invoice finance, etc. Each has a part to play, trade finance too. I have lost count of the number of customers that I've got in my portfolio of businesses that used their overdraft to buy fixed assets. And then when they needed working capital, they couldn't access it. It became too difficult. So part of what we're having to do now is part of putting professional people in front of them is to analyze those companies and to help them to make the right decisions. On the other side of it, internet's hugely important. If you go onto either NatWest or RBS's website today, there's something called Finance Finder. It's a really easy run through what every single one of these facilities is. So we recognize the issue. There's a big education element to be done here.
All right, so a challenge back to us as a business community. Can I take a second round of questions then from the audience? There was a gentleman who was waiting in the previous round who didn't get to ask his question. Are you still wanting to ask a question? It was you? I'll then take a question from the young lady just here and this gentleman just here.
Okay. Matthew Rott from Real Business here. Going back to the idea of the regional community banks, I just wonder why we would consider recreating a physical portfolio of banks across the country when we live in the age of the internet and all of this can be done online.
So clicks and mortar, not bricks and mortar. The young lady just here, please, next.
Ebony Allen, I'm a student from Oxford College. I was wondering, at what extent do you think the government has control and authority over banking and financing?
Could you just repeat the question?
To what extent do you think government has authority and control over banking and financing?
So does government have enough authority and control over banking and financing? It's a very good question. And our third questioner was this gentleman just here. Tom's got a microphone just here coming your way.
Thank you. I'm Alan Barrow from Cambridge. I work with a number of small companies in technology and I'm an angel investor. 2 weeks ago, we had the first national conference on crowdfunding at the University of Hertfordshire. Dr. Cable knows all about it because he wrote us an encouraging letter, those of us that were involved in it. And it's also been featured quite a lot in the Times and the Sunday Times. And I just would be very interested to hear the comments of those on the panel about, how big you might think it's going to be, what the risks are, and so on. Thank you.
Thank you very much. And I'll take a fourth question from over there. Apologies, the glare is in my eyes, so I could only just see you.
Thank you. Tim Jones, chair a LEP in the southwest. And it's a bit of a plea, I'm afraid, to you, Chris. I hear what you say about a balance of supply and demand. I have 63,000 VAT-registered businesses on my patch, and we're not sure how many non-VAT registered businesses who would tell you a different story about access to finance. I'm a fan of the business bank, I'm a fan of the funding circle initiatives, but they're small scale in relation to a problem we have today. We just do not have time for this. It's a plea, Chris. What on earth can you guys do? It's great having lending managers coming down to the regions, but your credit committees are based where? Birmingham? They don't understand my problems. We've got to do something about it now, Chris.
Tim, thank you very much. So scale and speed, I think, very much the theme of that particular contribution. Right, so questions on regional banks, whether government has enough control and oversight, I suppose, of banking and financing, around crowdfunding and how we can better potentiate it, and around scale and speed. Can I actually start with Ebony's question, actually, about whether government has enough control, authority and funding? And I think it's really important because when students are asking questions like that, there's a very big debate going on here. Vince, do you think that's the case?
Well, you could mean different things by your question. I don't think the problem has been, actually, lack of regulation. The banking sector was quite highly regulated before the crash of Northern Rock and then the others. The problem was that there was a weakness of supervision. Now, that's critically different. And I think we now know, when we look back on the crisis, that the FSA, had the regulatory powers, but it didn't use them properly. So I think just acquiring more government regulatory control over the banking system doesn't necessarily help us. There are one or two key things that have to be done. We're now putting through this big reform, separating out what the Governor of the Bank of England calls the casinos, fairly or unfairly, from the retail banking operation. That legislation is now going through, hopefully make the banks safer. But I would say that it isn't control. It is actually, the real need is for competition. It's for competition and diversity. More banks, different kinds of funding, both loan and equity and the variety that Lucy described. That's what we really need to get a healthy system.
You talk about competition and diversity. Let me open this up to the whole panel and come to Matthew's question, which was about regional banks. And I wrote down regional banks, why? There are people, and many of those who are in this room would think some kind of regional financial institution might be a good idea, perhaps because businesses and chambers of commerce are fundamentally rooted in places, and we forget sometimes that business is rooted in place. comes back to Tim's question about where credit control actually happens as well. How do we make sure that business people feel like they're getting local treatment, no matter what the wiring is that sits behind some of those decisions? Chris, can I start with you on that?
Yeah, so everybody has made some very good points here. Where's the credit committee? It doesn't matter. You know, we live in an age where if I'm here, I can talk to people anywhere in the world immediately. So, and by the way, we've not changed where the credit committees have been for 20 years. So these are the same credit committees that were irresponsibly lending 5 years ago, 10 years ago, and 15 years ago. So there's no change in that respect. What we have done by putting professional bankers back into the banking system is it allows us to give them authority to lend. And so 40% of all SME lending now can be done on site by the manager themselves. And I'm obviously working to make that even faster. Pre-approved is on the way. So we hope to be going to customers without selling them products to say, look, we've got this appetite for you. And I think people should know that. We're never going to be able to lend to all 63,000 companies. We never did. And actually, that's why it's important to listen to what Lucy said and what Samir said. There's room for this. This is good competition. We need competition. And we welcome it, you know. And we're never going to be able to supply everybody, and you wouldn't want to be as exposed as that anyway. And the issue about why do you need bricks and mortar and people versus online, you need both. In reality, I have about 300,000 customers who actually tell us they don't want to see anybody. They want to do everything online. And my job was to create a situation where they could, and they can now. They can make payments from a van at midnight on their phone instantaneously to people that they've set up. It's a brilliant thing. If you're with us, go and download it. It's absolutely fantastic.
I'm glad they can do that with you, because with HMRC, they tend not to be able to do that very late in the evening.
And so things like that are important. But my contention would be, at key points of businesses' lives, they need to see the whites of a banker's eyes. They need to understand, they need to have someone alongside them who can help and support them, and it's a big decision. A bit like we all have with our mortgages and things along those lines. So I think it's both, and I think the bank of the future needs to be able to combine all of the different channels in the way that the customer wants. So no customer in my bank ever will be told you use this channel or this channel. You can use whichever channel you want to, whenever you want to use it.
There's room for everyone, it seems. Samir, Lucy, do you want to come in on this? And also in particular on this point on crowdfunding as well, where clearly there is a latent appetite for more in this area. And you see not just from the demand side, but also from the supply side, people who are interested in getting more involved, but don't know necessarily how they can do it at scale.
I think one of the fundamental things here is whether the supplier of the money considers themselves to be an investor in your business. If they are an investor in your business, I think they are making a judgment call, normally about human beings and about human beings' ability to deliver on a business plan, which is why essentially equity, as one range of financial instruments, is nearly always delivered locally. It may well be funded centrally or globally, but it's always delivered locally. Someone will come and walk around your business. They're probably located in your cities, and it's why government equity funding to date may well have been funded with a big reservoir of a pot of money sitting centrally, but actually it's been delivered locally through local fund managers and so on. And I don't see that changing where you're making an investment decision. Like the gentleman before, I chair an angel investment group. We see the whites of the eyes of the businesses that we invest in. I think it is different if you are providing more of a working capital facility, where it might be shorter term, where it may be lower risk from the supplier's perspective, and where there's greater churn. And therefore, I can see absolutely that the internet provides a golden opportunity to do that more speedily. I can also see that for a domestic investor, even though they're making an investment decision, it's the most economical way, because they either haven't got the skills or the capital or the time to go and spend days on time walking around a business or having 2-hour meetings, but they are interested in putting a slice of their portfolio, a few grand or a few £100, and they can use a platform to do that, whether that's Funding Circle or crowdfunding or whatever. There are a number of those. So I think it depends actually on the nature of the investor, rather more than the nature of the recipient, actually. And again, I think it's important for us to recognise both sides of the investment decision, not just the recipient of the funds and what they're going to do with it, but the motivation of the investor and their time and their expertise as well.
Okay.
So I do see a role for local distribution, local decision making for investment, but I can also see massive economies of scale of things done through the internet, either for the domestic or for more of the churn and the working capital and the lower risk investment products.
But before I come back to Samir to talk about this from the investor side as well, because I think Lucy's raised a very important point there. Chris, you wanted to come in, but I wanted to just ask you a question that's related to what was just been said. You talked about 4,000 accredited bankers. Are those individuals going to provide some of what these business people seem to say they want? You know, we've heard whites of the eyes and things like that. They seem to want Captain Mannering without the 1970s.
Yeah, that's a good idea. So the old bank manager values delivered in a modern way, and there are people in this room I've seen in their regions in the last week who actually all told me that they really, really respect the local people who've been local people all their lives, who actually do support them and know them and understand the communities and things like that. The point I wanted to make, by the way, was just to reinforce what Lucy said with some colour. Understanding the difference between an investor and a bank that's a funder is as fundamental as this. If you're an equity investor, you charge a very large margin, okay? And on average, equity investors expect a third of the businesses that they invest in to fail. We as a bank, can afford 2 in 100 to go wrong before we make losses. That's the difference, and that's why I can't lend to 63,000 businesses. And it's nothing to do with capital, it's to do with margins. If you want me to start charging 10 and 15%, then I can let 10 in 100 go wrong. But I don't think you want me to do that.
Okay. Let me come to Samir to talk about the investor side, and then I'd like to take another round of questions and open it back up to the panel, please.
Yeah, so I mean, I'd like to talk about two things. So the first is the crowdfunding initiative. You know, in the UK, we are the global leaders in crowdfunding. So if you look at equity with companies like Crowdcube and Cedars and us on the lending side, you know, I mean, we've pretty much done more than the rest of the world combined in those types of products. And that's facilitated by some very good initiatives, you know, EIS, hopefully Business Finance Partnership will deliver as well. So, you know, there is a lot of really exciting stuff going on here. You know, I'm having a coffee with the governor of the Central Bank of Lebanon who wants to talk about peer-to-peer lending and how they can bring it to other countries, well, to Lebanon. You know, we hear about people all the time asking about this. So I think we're at the epicenter of something that's, you know, very, very exciting. And that mirrors our economy as well. You know, we hear a lot of talk about financial services, about manufacturing. You know, e-commerce now is nearly 10% of GDP. You know, we are the leading e-commerce economy in the world. So there's a lot of positive stuff that's happening. On the local stuff, you know, I have a very different vision of local and regional banks. You know, through our partnership with Lancashire County Council, we found we found that you can direct local money into these areas. You can do local marketing and actually educate businesses about the options available to them. And that's been incredibly successful. So, you know, our vision of local is local councils, local universities, so we've got Huddersfield University now, all participating through this marketplace. You know, if you take a step back, all we are really is the equivalent of the London Stock Exchange for business loans. You know, we're not lending any money ourselves. We're trying to screen some of the businesses and bring together all the different parties in one place. And I think that is a very efficient way of getting money directly to businesses.
And if you get up to the size and scale of the London Stock Exchange, I think a lot of SMEs will thank you indeed.
But if we think back to the start of the Stock Exchange was about coffee shops in London and people meeting one another. Someone had capital, someone had a business idea, and they met. All that happens now is we meet on the internet. The Stock Exchange doesn't. I was there last Friday trying to open the Stock Exchange floor along with 50 other women. There is no Stock Exchange floor. Everything is virtual. But it's still human beings making risk and investment decisions. And again, I think we have to keep all of this conversation, go back to the principles. What is it we're actually all trying to do here? We're trying to get capital deployed in growing businesses, to grow the economy, to provide a return, to create jobs, pay more tax for all the social benefits we want, create returns for employees, customers, and shareholders. And if we keep focusing on that, actually, I think you can assess almost any initiative against its ability to deliver against those core objectives.
Brilliant. I'd like to take some more audience questions now if I can. There's a gentleman here who was waiting from the last time, a gentleman here who hasn't spoken yet. There's another questioner just there that hasn't spoken yet, so that's 3, and just there is number 4. So can you just tell us who you are as well before you ask your question?
My name's Richard Lay. I run a group of 8 companies with my 3 brothers. We saw this recession like Dr. Cable did long before it happened. We have in deposit part of, a small part unfortunately, of 55 billion small loans. Until the banks stop the forbearance and get the property assets and the business assets that are held by these zombie companies out onto the market so we can pay a fair price for them and restart the market with our own cash, I don't feel the initiatives you're putting forward can bear the fruits that they could otherwise do.
Can I just clarify one thing? Is it the banks and government that both have to push for an end to forbearance? Is that what you're saying?
I think the government, can I ask Dr. Cable if the government could put more pressure on the banks to clear the balance sheets out of the bank to non-performing loans?
Okay, thank you for clarifying that. Gentleman just here.
Phil Wood, I'm president of the North Staffordshire Chamber. I'm a chartered accountant, a chartered tax advisor and a licensed insolvency practitioner. So as you can see, I'm probably fairly heavily regulated. Dr. Cable, may I suggest that when you do your review of insolvency fees, you start by looking in your own backyard, and specifically the fees that the Secretary of State charges for operating the Insolvency Services bank account. People might not know this, but if you were unfortunate enough to be made bankrupt, the first £2,000 of your assets probably go to pay for the fees of the person who's made you bankrupt. The next £1,700 goes to the Secretary of State for the privilege of operating a bank account that we have no option but to use. 75% of the next £1,500 goes to the Secretary of State, and 15% of the next £396,000 also goes to the Secretary of State. That's a hell of a lot of money, sir.
Phil, these are clearly figures that have been drilled into your head over the years, but you're apparently at the top of the creditor list, so we'll come back to you on that. Gentleman at the back.
Yes, it's Owen Gledall, the President of Barnsley and Rotherham Chamber of Commerce. We've heard fantastic news from the panel about how effective all this financing is. But if you talk to my members, they don't see it that way. And certainly having heard from the chair of the LEP of the South West, his businesses don't see it that way either. Why is this fantastic good news not getting out to us?
Right, are the channels broken? We'll come back to that one, and then the final questioner was just here.
David Wall, President of the Jersey Chamber of Commerce. Yesterday I attended an AGM of a credit union, and to my surprise found that the growth in members of this credit union was about 20% year on year. Now, I think that actually sounds like quite a good number until you find out why that growth is happening. A lot of it's coming from white-collar workers who are being made redundant, who basically find their assets being frozen in the mainstream banking community, have no way of accessing any funds, then find themselves having to use a credit union, get their money into there so that that money which they earn or their income, they can actually then access it and use it to pay their bills, which if it was actually going into the mainstream banking or back into mainstream banking would be used to pay down overdrafts and debts. My concern here is, and it goes back probably to the first question here, is that we seem to have a frozen position, and these people therefore are struggling. We talk about zombie businesses, almost zombie individuals, who have no ability, if the economy does pick up, to actually take part in that economy going forward. Now, whose responsibility, or I don't say responsibility, has anybody in the panel got an idea about how to unfreeze that situation, how we might go about doing that?
I feel like I've stepped into the film 28 Days Later or something. Either the companies are zombies, the individuals are zombies, everyone's a zombie all of a sudden. Vince, let me come to Phil's question first, because it was quite specific. It's this question of the costs associated with the insolvency process or with reorganization, administration, etc. I just wonder, is it right that government should be the sort of first creditor in some of these situations with the kinds of rates that Phil's talking about?
Well, I understand the problem. I've got a constituent who I've been working with for 10 years on a very bad bankruptcy case. And she came round to my office recently and she said, "Why are you taking all my money and you wanted me to get my checkbook out and give it back?" But the answer to your question actually is on the front page of today's Financial Times. The headline was, "Is the Insolvency Service becoming insolvent?" Because despite the fees that you describe it, there are so few companies going down at the moment, they're not getting any income. And you know, the insolvency service is losing a lot of money. So, so I understand your problem at a personal level, but if you look at the big picture, it's not that we're swimming in cash generated by bankrupt firms, I can assure you.
Right. Let me come to you, Chris, on this.
I'm just a bit worried. I think they banked us.
Do they? Right. I think Phil will have a word with you after this session. Just on this point about forbearance, which clearly is related, there is quite a lot of talk in the media about forbearance being one of the reasons why this phenomenon may or may not exist of zombie companies, etc. How are you as a bank seeing this, experiencing it, handling it? Do you have a lot of companies that you feel in normal times wouldn't be able to generate growth?
No, I think if we, so we don't use that term, I think it's a pretty disrespectful term, to be honest, for businesses that are still running. And you have to be quite careful here. You know, if somebody's got a business that's running, they're paying their bills, they're paying their interest charges, and they're still employing people, you know, we can't all just run in and tell them, well, we don't think you're very good, so, you know, we're going to take all this stuff off you, and you lose all your investment, and we're going to just, you know, we're going to allow someone else to buy your property cheaper and things along those lines. There are laws in this country, and we have to be fair around these things. We look at the loan-to-value of properties that we've got on our books at all times. We constantly upgrade that, and we look at the interest cover that we've got, and we look at those that are challenged at the top end of both of those. It's a tiny, tiny percentage of single figures of our entire book. Now, over a period of time, that could improve as well. So it's a more complex issue than we care to imagine. And to be honest, I haven't got a clue how to answer the other gentleman's issue.
I think we'll have a separate conference for zombie individuals, perhaps.
Yeah.
Lucy, can I come to you just on the second part of Richard's point, which is, you know, should the government perhaps be doing something, or the banks be doing something to help push the acquisition of companies that might find themselves into some of those circumstances? You work with huge numbers of companies in your own personal career who probably find themselves at some of those critical points in their life cycle when those sorts of decisions have to be taken. Is there something more that could be done to increase the rate of those kinds of transitions that spark innovation and spark growth?
Yes, again, I think it's fine to look at financiers and the government and say they should sort this all out. But actually, I think we need to hold up a mirror to ourselves as business leaders. My experience is that a lot of businesses had planned to sell in the last 5 years. And hey presto, with the way the world's been, that hasn't been possible. We're very keen to sell businesses in the UK. Us and the Americans seem to think that selling is what you ought to do. It's not what our European neighbours do. It's not what our Chinese and Japanese competitors do. It's certainly not what our Indian competitors do. They hand on businesses. They differentiate between who's running their business and who owns their business. And we're actually pretty poor at doing that in the UK. And we're pretty poor at managing succession of ownership and training perhaps our adult children or perhaps our existing management team to take on the role and responsibility of shareholder, when we may give that up, or indeed the idea that we may have to give up the role of being the director because we're no longer the most capable person of running and operating the business, but we may retain ownership. In the UK, we love fusing those two roles together. We hate having to discuss whether we're making a decision as a shareholder or as a director. And I think one of the opportunities actually for some of the zombie businesses, and I do know exactly what you mean, is the person who's owning it is also the one who's running it, and he's seen it, and it normally is a he, by the way, and he sees it as his pension fund, and he doesn't believe anyone else can run it better than he can, and, excuse my language, he's buggered if he's going to give it up. Actually, he's wrong. He's wrong by his employees, he's wrong by his fellow taxpayers, he's wrong by his bank. But you try telling a British businessman that. Nobody likes to be told they're wrong. And again, it's an education and a cultural thing, and it's going to take us a very long time. And I'm delighted to see that those people setting up businesses basically who are younger than me, and I'm 44, actually are going into their businesses with a very different outlook about ownership, directors, external advice, professional management. But I think this problem actually resides with us as business people. It doesn't reside with the funders, and it doesn't reside with government.
Well, I want to bring Samir in here, because Samir, I'm guessing that the age profile of a lot of the business people who come to your business looking for finance perhaps fit into that younger demographic that Lucy has just talked about, who probably do have a different attitude towards this sort of stuff. Do you see a generational difference in British business people in terms of their attitudes to business finance?
No, actually, it's not the case that it's a younger demographic. So the average age of businesses that come to Funding Circle is about 11 years. They've actually got 11 employees, so it's quite an easy number to remember. And they broadly match the population of UK businesses.
So is Lucy overdoing this generational shift then, do you think?
Well, I don't know really. I wouldn't say that. I mean, I think...
Go on, let's have a fight.
Well, I think that...
I'm trying.
I think it would be wrong to categorise a number of businesses as, not being able to understand these new things that are happening, like peer-to-peer lending. Actually, you've got I think our oldest borrower is 80, a director there. So I think, you've got traditional businesses using this as an alternative. The other thing I think the gentleman from Rotherham asked, if everything was so positive. In terms of us, we're very positive, but, the biggest problem we have is awareness. Less than 1% of businesses have heard of Funding Circles. That's an independent FSB survey. And unfortunately, we don't have the money to sponsor events like this. But what we rely on is the network effect. So, we have 30,000 people now using us, about 1,600 borrowers. And we rely on those borrowers telling other borrowers, or you going back to Rotherham and telling businesses there that there is this alternative to banks. There was a business in Twickenham, which is Dr. Cable's constituency, where 490 people lent them £30,000. It's a coffee roasting business, so if Dr. Cable wouldn't mind coming along and visiting, and we could get some PR out of that, that would help as well. So all these kinds of things are, it is changing. It's going to take a while. But just like other networks, like Twitter, even iTunes, once you can get to a certain level of scale, these things can really start to accelerate.
I want to now give the last word, if I can, to Dr. Cable and to Chris about Owen's point. Owen basically said, all these great news stories, we hear announcement after announcement after announcement. How come it doesn't feel different to us on the ground? And I think as I go around chambers of commerce around the country and businesses around the country, that's what I constantly hear, and it's the challenge that we put back constantly to government. We think you're doing the right things, but we're a bit worried that it isn't getting delivered on the ground. And we can say the same thing to many of the banks, and you and I, Chris, have been in your own boardroom where I heard absolutely everything I wanted to hear, and then you go back out to the coal face and you hear something a little bit different. How do we make this happen?
Yeah, I think that one of the issues we get is, a comment becomes a general comment. So you hear it once and it resonates with you, so you repeat it, and all of a sudden we say nobody's getting anything. And in truth, it's never that black and white. So I want to correct any misconception here. I don't think it's wonderful out there. I don't think any of the businesses in the UK think it's wonderful out there. I do think it's improving out there. And as I said, I see 300 businesses a month. So I can feel some green shoots, but it's very, very anemic right now, and it's hugely based off confidence. A year ago, people still thought the euro was going to collapse. Every month it doesn't, and it doesn't appear to, and nobody talks about it. People feel a bit more confident. So the reason that people would say, well, there's all these things going on, and why am I not feeling it? Well, the reason they're all going on is because we all know that we're trying to find new ways to get things to happen. And some of those things take a while, So I'm optimistic that they are starting to work. I can feel it from the people. I'm very open to criticism. And by the way, any of the people that have said it doesn't feel like that down with me, invite me down, and I'll bring some people, and we can talk about why it's not working, and we'll see what else we can do.
Chris, thank you. Vince, last word to you.
Well, I think part of the answer to your question is that the British experience varies enormously from one part of the country to another. We are very London-centric, and the experience in London at the moment economically is overall rather good. I mean, house prices are booming, business is booming, lots of startups. There's pockets of poverty in London, but London is a very dynamic global city. If you go to the other end of the scale, Northern Ireland and Wales are slumped in very, very deep economic crisis, and there are parts of the north of England which are similar. So we have big regional variations for a start. I think the other problem is that both the banking system and government have become very highly centralized and just not having a feel for what's happening on the ground. And it's happened in the banking system because they stripped out relationship banking and replaced bank managers by salesmen. Chris is doing a great job in his bank trying to, reverse all of that, and we see this beginning to happen. We're just as guilty in government. Successive governments have got more and more power coming to the centre. Local councils have been stripped of any real responsibility. What we're trying to do in a small way is try to give the big cities, particularly in England, Scotland, more genuine authority. We have what we call city deals, where we're saying to Birmingham and Liverpool and Manchester and the rest of them, look, you take some of these responsibilities off it, do it locally, engage with your local business community through your chambers, for example. Michael Heselstein is doing a lot of work in Birmingham at the moment. Work through your chambers and connect with your local business. And I think in that way, slowly, we begin to get a sense of connection with what's really happening on the ground.
And that's what we're going to be spending the rest of our afternoon talking about, actually, both with our next panel, which is going to pick up this theme of entrepreneurship and localism, and, of course, with Michael Heselstein later on this afternoon when he's going to set out his vision of a more local Britain for our future. Now, ladies and gentlemen, I want to thank you because you have made what is typically called the graveyard shift of any conference a most spiky and sparking one. So really, really thank you very much for those comments. You're not allowed to leave at the coffee break that's coming up now. We want to see you back in here at 2:45 p.m. for that next session on local economies and how we grow them going forward. But in the meantime, even if it was the graveyard shift, even if we did talk a lot about zombies, can you thank our panel very much indeed?